Welcome to the August edition of Money, Markets, and More. We hope you guys enjoyed your summer and are looking forward to the fall and some cooler temperatures. I know we certainly are. And our kids are all back in school. Lucas is a senior at Catholic High School. Hayes is in 8th grade at Catholic, and then Juliet is in 5th grade. So they're all busy, the boys with football and Juliet with cheer. So we've got a lot of exciting things happening with them coming up in the fall, and lots of busy times ahead for sure. So with today's episode, what we wanted to do is cover a couple of different things. First, August is Financial Awareness Month, and so we wanted to cover just a few things with you guys as it pertains to being financially aware. And then also we wanted to give you an update on the markets, what we've seen so far this year, and then what we expect going forward for the remainder of the year, and then obviously for 2024. So with that, let's talk about what it means to be financially prepared and aware. And one thing that comes to mind when I'm thinking about this, that a lot of us go through this exercise as we're preparing for retirement, but maybe not again after we've kind of crossed over that threshold, is to have a personal financial statement. And all that means is making sure that at least annually we take a look at what our assets are and what our liabilities are, and make sure that we're moving in the correct direction for that. Meaning, we obviously, in best case scenario, want to see that our assets are increasing and our liabilities are decreasing. Now, that doesn't always happen just like that. You know, some years if we have a bad year in the market, for example, it will throw off our assets. Or if we make a big purchase, that can increase our liabilities. We just think it's a good exercise to go through to make sure that we're all aware of what's going on in our finances. Doesn't have to be anything fancy, just a simple piece of paper, listing assets, listing debts. And then as always, if you need help doing that or you have questions, please don't hesitate to reach out to us. With that, I'm going to turn it over to Callan, and he's going to give you guys an update on the markets, again, what we've seen so far this year and what we expect going forward.
Welcome back to Money, Markets, and More. Today we're going to talk about what has happened so far this year and what we think is going to happen going forward for the remainder of 2023. The Fed has continued on their aggressive attack of inflation, raising rates multiple times this year. They've said they're data dependent throughout the year, but we think that there's maybe one more rate hike, if not two, and then they're going to pause and see how the economy reacts. Bonds have done very poorly last year, and so far this year they haven't done much either. But the stock market has done extremely well. Companies have been very resilient in this higher rate market and have done well, although some of those earning reports are coming down a little bit. So that being said, what do we think is going to happen going forward? Most analysts had the markets where we are right now. So the question is, do they make adjustments and move up, or do they maintain their current market forecast and say that we don't move much higher or lower between now and the end of the year? Coming into August, we were on a tear, but August, the market has definitely taken a breather and has slowed down and pulled back a little bit. So it'll be interesting to see how the analysts react to that and see if they make adjustments. The camp for the recession was very big, and there were a lot of people thinking there was going to be a recession at the end of the year or the beginning of next year. People are starting to leave that camp and thinking maybe there won't be a recession. I personally am still in that camp. I think there will be at some point. It may get deferred till next year, but if there is one, it'll be a short and shallow recession, not bad. That being said, we think that from now until the end of the year, bonds are an attractive option if stocks do go sideways for a while. Bond yields are very high, with the mortgage rates reaching a 21-year high last week. We think that you can get attractive rates on your bonds. If there is a recession at some point next year, historically, the Fed has cut rates aggressively, which is also very attractive for bonds. So we think bonds at this point, having been down for 18 months, is an attractive option if stocks do go sideways for a period of time. So that all being said, that's what we think is going to happen between now and the end of the year. We'd love to hear your feedback, and if there's something that you would like for us to hit on or to talk about, we'd love to hear from you about that. So until next time, hopefully fall is here soon because it's been sweltering here. We'll be back with money, markets, and more next month. Thank you very much.